comment was that we have a first mover advantage. I definitely feel, competition will catch up. If whenever there's an attractive opportunity, you can never say that there will not be any competition. The advantage is definitely a first mover advantage. It comes from a proprietary LLM that AJE has created over the years. So competition, potentially will catch up. But yes, the from a growth trajectory, we are seeing, at least on the query side of the business, much higher growth. Overall, this sector, this B2C sector working with authors the growth rate tends to be much higher than, the B2B space. Historically, of course, MPS has never played in this part of the value chain before. But just to give you an example, I remember when I became CEO in 2015, 2016, our revenue was 225 crores. During a period between then and last financial year, our revenue went from 225 to 500. In the same period of time, one of the players who's in an adjacent market, they were at 200 crores, Mumbai-based company. I won't name them, but they went from 200 crores to 850 crores. So we went from 225 to 500. They went from 200 to over 850. So clearly, this market, and again, they did that without. They don't have an equivalent to QE. So that's the absence of QE. So obviously, we've now entered a marketplace that has more tailwinds and a higher CAGR than the market that we've been operating in. It almost feels like resistance training, where we were operating in a very difficult market and doing extremely well, and now we enter this new market where the tailwinds and the rates have been lifted off. So hopefully, as long as we do a good job in execution, we should be able to achieve higher growth rates in this market compared to our incumbent B2B market.
Okay, that's great to hear. And follow-up, I want to ask a follow-up of that. You, in one of your press releases, have stated that AI natural language processing market is 200 billion. Please, it looks like a bit of a misnomer. So try to just put the number which is being only addressable by our company. So it gives a false impression of being higher total addressable markets. That is a bit of suggestion from my side. And I have a couple of sure.
Sure, thank you. We appreciate the recommendation. We quite humbly we got it from the information we got from the seller. But yes, you're right. You're absolutely right. We should be talking about TAM and not the total market. So we will take your suggestion. Thank you so much.
One data keeping question is that I want revenue per user of the company. What is the churn rate, and what is the ad revenue out of this 200 crore, whatever you mentioned, out of the total revenue mentioned?
Again, for competitive reasons, I don't feel comfortable sharing that granularity of data points. What we can confirm is, total revenue is 200 to 250 crores, and we're serving over 80,000 authors. But beyond that, I would be very uncomfortable sharing data because, again, we've just taken over and want the company to do well.
I greatly appreciate, Rahul, your efforts, a phenomenal execution, a phenomenal acquisition. We hope that you will complete 1 or 2 more acquisitions going forward. Thanks to the whole team.
Thank you so much. That's the plan.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Opportunity, sir. Sir, I wanted to know 2 questions. Sir, why has the revenue been stagnant for AJE for the past 3 years? And the second question would be, sir, with all these allegations against deans of various institutions in the US, the need for checking on plagiarism as well as providing correct citation has increased. So I wanted to know how are we, is there a thought behind this to capture this opportunity as well as the revenue stagnancy part? Thank you.
So, sorry, could you repeat the second part of your question? I got your first part. Could you repeat the second part a bit louder, please?
Sure. Sir, I wanted to know, after this movement like Bill Ackman, they have recently made allegations against various deans of these MRCs. So there has been a discussion regarding an AI plagiarism as well as an also citation
Sorry
tool.
to interrupt. Mr. Rathi, it is very difficult to
Yes.
understand what you're saying. So, in case
Am I audible right now?
it is, but you're sounding
Hello?
very much muffled. Are you using the speaker mode, sir?
Am I audible right
this
now?
This is much better, sir. Yes, please. Can you please
Yeah.
repeat the question?
Sir, I wanted to understand that I wanted to understand regarding providing correct citations as well as an AI-driven plagiarism tool that's being in discussion with various US universities. So are we planning on making move in this kind of market, or I wanted to gain your understanding regarding how our current tools as well as AJE can help us growing in this market?
Thank you so much. I'll answer the second question first. Yes, absolutely. Research integrity is a growing area of investment from our customers. We have developed as MPS both a tool set as well as services to deliver on the research integrity requirements. Much of it is now being outsourced by our customer base. Similarly, AJE also has this capability. So the RQE service, the research quality service I was talking about at the top of the call, is exactly that. It's an investment towards improving research integrity. So yes, that's an exciting part of the market, and we're expecting significant growth there. In terms of revenue stagnating, I think a couple of reasons. One, of course, being attached to Springer Nature basically meant that they could only capture a certain portion of the market, and that market was basically authors that were in the Springer Nature universe, and it kind of tapped out their potential. So on the B2C side, there was a ceiling. Now that ceiling has been broken because we are now able to reach out to all authors, not just the Springer Nature universe. Similarly, on the B2B side, now that we are publisher neutral, publisher agnostic, we will be able to market these services to other competitors of Springer Nature and other publishers as well. So because of that, we are more optimistic about the future. But that was the answer on why the revenues have been stagnant. It's mostly been because Springer Nature acquired this business for a very strategic intent, which was to improve and elevate the author experience of authors engaging with Springer Nature specifically.
Okay. So just question. So the 5-year agreement that we have with Springer Nature, so what would be the current revenues that comes from Springer Nature as well as from China? You mentioned 20% of our revenue going forward.
Okay, thank you. So those revenues are similar to $5 million, and basically, Springer Nature is providing author services to authors from their platform, and those orders are redirected to AJE. So we have a 5-year term during which we have an exclusive partnership where we will be servicing those particular set of authors, and of course we also have royalties that we pay to Springer Nature once we get those orders.
Thank you.
Thank you.
Thank you. The next question is from the line of Karan Kapuria, who's an individual investor. Please go ahead.
Yeah. Hi, Rahul. Actually, I just want to understand about what type of geography are we looking to target by this B2C acquisition of AJE? Can you throw some light on it?
Yes, thank you for that question. So as of today, China is north of 65% of total revenue. And there are, of course, various other markets that they're present in, but the majority of AJE, the market is China. We expect markets, now that MPS, of course, being a public company in India, we expect markets like India, where the query tool is doing exceptionally well, to pick up, as we understand the India market really well. Directly for AJE, it's mostly markets where English is not the first language. Those are the primary markets, China being the biggest, greater than 65%.
So are we planning to target some other bigger geographies, maybe in the upcoming years, like India or US?
Yes, absolutely. So India is going to be our first course of action, given its home. The US, of course, English is the first language, so it's not the right market. But in the Americas, Central and South America would be excellent markets for us to pursue.
Okay. Well, my last question to you is, are you planning to do more acquisitions like similar to AJE this year, or these are planned for next year?
So yeah, like I had pointed out, we are pursuing 2 acquisitions this year. One we've already completed. Both acquisitions north of $20 million in revenue. So yes, we absolutely are looking at doing another one in the later part of the year.
Yes, sir. Can you? I missed the revenue part. What is the revenue size that you are targeting?
Minimum $20 million in revenue is what we're looking at.
Okay. Okay. Thanks.
Thank you.
Thank you. The next question is from the line of Keshav Garg from Countercyclical PMS. Please go ahead.
Sir, I'm trying to understand, sir, that like you mentioned that we are expecting in FY25 between 200 to 250 crores revenue from the acquired entity. So if we take 225 crore, and sir, if we assume 30% operating margin that you are confident of achieving on the acquired business, so that gives us somewhere around 70 crore of additional EBITDA from this acquired entity, which is equivalent to what the amount we have paid to acquire it. And as you mentioned that the payback period you were expecting was 3 years, but here it seems that in 1 year itself we will be able to recoup whatever we have paid, at least in operating profit level. So is that understanding correct, or am I missing anything?
Yeah, I think, thanks, Keshav. Thanks for the question. No, I think, just to edit what you said, so the gross margin for this business is 65%. We are going to enter the new financial year in the early teens, in terms of EBITDA margin, and we will exit the financial year, in the late 20s, early 30s. So there's an entry point and an exit point. I think taking an average of 30% for the entire year, I wouldn't agree with that math. So it'll be somewhere in between. In terms of payback period, 3 years is where we definitely want to recoup all the monies that have been invested within that 3-year period. Historically, we've done better than that. So, for example, in the Highwire acquisition, our ROC in the first year itself was 86%. Will this one be similar? I'm not sure, but it'll definitely be higher than our existing ROC for the company, which is north of 30%.
And sir, lastly, sir, now so we had 3 business divisions. So now is there a 4th business division, this acquired entity, or sir, which content platform or e-learning, where will these numbers be added?
So these numbers will be attributed to content and platforms. When we report our first quarter for FY25, it will be clear what the distribution between those 2 segments is. At some point, depending on how this business performs, a better way to look at MPS might be B2B and B2C. But again, that's 2 years away. For now, I think we will probably just look at our business the same way and distribute the revenue and the income across content and platforms.
Great, sir. So thank you very much and best of luck.
Thank you.
Thank you. The next question is from the line of Dipesh Lakhani from Dolat Capital. Please go ahead.
Yeah. So what is the amortization jump we might see on this acquisition?
All right. I'll hand that question over to our CFO. Thank you for the question. So this would be based on the fair market which we are going to work out for each asset and over the useful period of life, which is still under working. So we should be in a position to do the amortization once we have the complete clarity and workings on that. So next quarter, that'll be fine. Yes, it would be in the next quarter.
All right. So my second question is, what is the timeline for company's average profitability that you expect for AJE?
Could you repeat that, please? What is that? Could you repeat that, please?
What is the timeline that we could expect the AJE's profitability to match with the company?
Yeah, we're aiming for 12 months. So we're hoping that the new financial year starts in the early teens, and ends up in the late 20s, early 30s is the goal. And of course, the goal is for not to stop there. We again, similar to our other businesses, content and platforms, this business also has tremendous operating leverage. So beyond that, as revenue grows, margins will continue to expand.
All right. Thanks.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and 1 on your touchtone phone now. The next question is from the line of Ankit Kanodia from SmartSync Investment Advisory Services. Please go ahead.
Thank you for taking my question. And I think you have covered really well about the acquisition in this call already. So my only question right now is related to the acquisitions which we mentioned in the previous quarterly call as well. So I just wanted to know your point on, as you said that you will be having one more acquisition this year. So how are we placed in terms of FY25? Do we have more acquisition plan? And what is the funding scenario looking like? Are we comfortable with internal accruals, or are we planning to raise debt or maybe equity fundraise?
Thank you for your question. Yes, I think the plan for acquisition remains the same. So the acquisition that I was thinking about, that I was talking about the last call, was this particular acquisition, AJE. The deal was at a fairly advanced stage. It took longer to close than we had thought. The next acquisition, of course, is we'll be planning it in FY25. In terms of funds, I think we think it's going to be a combination of internal accruals, but also if debt is needed, we're comfortable to raise debt to the tune of the forward financial year's PAT. So yeah, I think we're good on funding for the next acquisition.
And we maintain our guidance of more than 130 crores of PAT this accounting year, FY24.
Yeah, like I had shared in the last quarterly call, given the deferment of a large project on the e-learning side, we will probably miss our guidance of PAT for this financial year, FY24. But FY25, we are bullish about performance. It's too soon for us to talk about FY25 guidance, but at some point next year, rather next financial year, we will share that guidance. But at this point, we can only say that we are very optimistic about FY25.
Thank you. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Rahul Pansali from Prami Capital. Please go ahead.
Yes, hi. So our business has scaled up significantly over the last 2 to 3 years. And, we are in different geographies now, and we have B2B and B2C. And so it has scaled up a lot. So I just wanted to understand that, how do you plan to govern the business, and what is your role going to be, Rahul? Because, it's a very different company from when you had joined. And plus, we are also planning to acquire a couple of more businesses. So I just wanted to understand how do you plan to govern the business now?
Thank you for the excellent question. Yes, I think we've obviously, this has not suddenly happened. We've been planning and working diligently towards this outcome. Overall, we've been investing in the next 3 layers of management. We have general management teams that we call the GMT, which is focused on a specific business area. We have another layer that we call the SMT, which is the senior management team. The senior management team spreads across multiple business areas and not specifically one business area. And finally, we have the leadership team, which is focused at a vertical level, and some of us are also focused across verticals. In terms of my role, I'm of course the chairman and CEO of the company. And over a period of time, as we have scaled, I'm doing less and less in terms of daily transactions and focusing more on the growth of the business, the strategic thinking, as well as driving the business forward from a vision standpoint. So my role, of course, has significantly transformed in the last couple of years, and I've been able to do that because of an excellent team that is supporting me. Also, some of the acquisitions that we've done have come with founders, and some of the ones that we will do forward as well will also come with additional founders. Those founders are being placed right at the leadership team from day one, so that they can add tremendous value to the company as well as to the rest of the management team. Yes. So absolutely, the business scale is increasing, but we are not, we're also rapidly investing in management depth. We have created, through the hard route, a culture of ownership. We have rewarded that culture of ownership, through ESOPs. We today have 55 people that have ESOPs in the company. We have over 100 people who we call the torch bearers. So between the GMT, SMT, and LT, there's about 35 people. And beyond the 35 people, there's another 100 people that we call the torch bearers that are responsible for the day-to-day transactions. So yes, very, very astute observation. My specific role has transformed, but so has many others, and we continue to invest in management and scaling the business.
Got it. Thank you so much.
Thank you.
Thank you. Participants, if you wish to ask questions, you may press star and 1 on your touchtone phone. The next question is from the line of Mahesh, who's an individual investor. Please go ahead.
Hi again, Rahul. How long will you wait for the next acquisition? Is it dependent on or contingent on anything related to AJE acquisition itself?
Thank you for the question. No, nothing contingent on the AJE acquisition. I have a managing director in the US who is running the integration agenda. He was the CEO of one of our competitors he joined us recently in the US. So he's driving the integration agenda on AJE. My goal would be, 6 to 8 months we should do the next one. Of course, we are pursuing multiple opportunities. So timing also gets determined by how fast the sellers move. But yes, nothing contingent on what AJE does.
Okay, thank you. Also, in Jan, you had mentioned about a new launch related to AI. Was that Curie?
Yes, that was Curie.
Okay. Thank you, Rahul.
Thank you.
Okay.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Rahul Arora for closing comments.
Thank you so much. AJE is our 10th acquisition since Macmillan entrusted us with the reins at MPS. It's very serendipitous that life has come full circle, and the same company has sold us AJE, that sold us MPS. My team and I are committed to supporting AJE towards its complete potential, as we've done with MPS over the past decade. AJE was founded to democratize discovery and research by an Indian immigrant. At MPS, our deep purpose has always been to further access education and learning, and there could not be more alignment in purpose, mission, and values between MPS and AJE. A diligent and responsible team effort lies ahead to take an excellent strategy to a magical reality through a common culture. Thank you for your active participation in our announcement call on the recent acquisition. We appreciate all your thoughtful questions. Your unique outside-in perspective helps us to learn and improve. I want to take this opportunity to express my gratitude to all our stakeholders for their continued support and respect. Our journey together has indeed been remarkable, and we have a tremendous opportunity to supercharge scale from here. I look forward to your continued support, feedback, and partnership mindset. Thank you.
Thank you. On behalf of MPS Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.